Good afternoon. Welcome back. We got 3 minutes. To be honest with you, this close has offered a few opportunities to pick up some of our coveted long positions off of some of just the continued pullback off of some of the big moves. I mentioned some in chat, but uh, the support we're generating, again, the understanding we have of how the market's trading right now, uh, has allowed for some of these buys. And again, you want to. This is the hard part. Again, is that you don't want to wait until tomorrow. A lot of times we can say, well, it's pulling back. And so I'm going to just, again, almost every single growth ticker looks like this. So uh, besides mega caps, every growth ticker looks like this. We've already looked at all the charts. We'll look at them all. But the tickers that are doing this and they're pulling into their support, you buy this today. You don't buy it at open. It's, again, yeah, price could go down tomorrow. That This is a very different thing here. And again, this is where this is not popping right off because there's 1 minute to freaking close, right? This is where you take the money, and that's this from here to wherever this opens would be our alpha because we get to take a trade that others do not have. That's the space we can operate in because even if it opens a little bit lower, we're not going to get crushed by it. It's not going to be soul crushing, right? And there's a lot of charts that are like this. I mentioned TWLO as well. It's right there. The same thing came into support, and you take it. Now, we took a lot of trades on support today. We're going to go over them. But just right now in this moment, I think SMH was a nice trade I took earlier after we got up to call. These kind of things, they all are doing the same idea, right? It's just understanding that you have to take it in this sort of moment now if you want to generate that alpha. There's nothing wrong with just waiting, and you can just go put your long trades on and push them for your month, whatever you want to do. But I would say right now is an opportunity. Uh, 50 seconds. Again, there's no price action, and that's where it's important to realize that all the price action that's going to come and that has been coming is not intraday. It's from after hours, right? So 30 seconds. Here, give me 1 sec. We'll get going here. And again, it's about making our trades and sort of, I talk about the first 30 minutes of the day, making it at close as well. It's the same concept. Making it right here coming into the close. It allows you to, again, you're not capturing on the intraday level. But what you're trying to do is if you have an understanding of where the market is and you have an understanding of buying on support, if it does come into that last moment and you get these trades that, again, I'm just going to use this as an example because I think it's a good example. Right here, 1145 is support, and it pulled into there all day, and it's been on the same path as all these other growth tickers, as the same move from this candle here, the 14th. We got a lot of big sell candles here, and a lot of the price action was kind of confusing, so we had to exit our short-term play. Again, think of all the charts that we traded from this support up to the trend line. Things like Snap and things like Snap and SQ and all these charts, right up to here. We traded these to here. Twitter be a better example because I got the trend line right there. We trade them from support right to here, right? And then we have this drooping down, right? We started to pull back. You don't really get to know and decide for yourself where it is that the price is going to reverse, right? And I think it can be frustrating. I think there's probably some things today that are frustrating where I'm saying for things that I kind of did here in the morning where I bought Tesla and now you can look at it and be like, and I'm trying to like put it through from just the gauge of talking to you guys is that I bought Tesla at the very low. And it's really easy to be like, wow, that was easy. You bought it at the low. And we just kind of do it live. And then it's like, you can look in hindsight and be like, well, it's just because it's someone else is doing it. So just to put this clear, because again, this sort of happens and it's not about, there's not something that you can have a better read or something, but we don't really get to know the timing, and it's just about if you take that chance as it's there, right? And you sort of you already have this idea in mind of how you're going to be doing this, and you're looking for the tightening, and it's it's important just to take advantage of that moment, and it doesn't matter what it feels like or looks like afterwards, because again, this could have just continued to trade down, and then we have another time, and it's because you take every single one of those moments. So I just want to, before we go further here and look at things, I want to clear up some of the again, it's not about the perfecting the part. It's about just taking the fucking trade to begin with. Okay, and it's really easy to be like it could be frustrating for some of you that maybe you're doing something else and you're working and you're just slower and you need to be getting confirmation, and then you look at the difference there, and that is the difference. That is 100% the difference. And again, when we're in this sort of market here where we're just sort of trending, and we'll look at the overall, but when you're looking at the trend and how things are just kind of a little bit slower right now, and the chances are, we can understand, are they're a little bit rougher around the edges. You're not going to have these areas where you can make a lot of money very quickly, right? We understand that. It's important not to get sort of beat up on. Someone can go put a trade in and get it at the low and then be up from there, and then now you have to go make that trade at a higher percent and it doesn't feel as good. You got to remember that, okay, that is an opportunity, and there's money to be made in that area, but it also doesn't stop you yourself from making a trade. And I think that can happen. And I don't really have experience with it myself, but when I talk about these ideas and then they sort of happen, and then you go, well, he took the better trade, so I can't take it now. Those things, you got to make sure don't let it affect your sort of your ability to do something, because again, it's not about being. We try to strive for perfection, and sometimes we're going to catch the low, and it feels good to catch the low, but it's important to realize that when you catch the low for basically no reason, and when there's times that you do, and a lot of times it's like that wasn't in the middle of nowhere. There's no support. I have no line drawn there, so that's me just being honestly all the time aggressive, right? And I'm going to buy every single time I think there's some tightening, and I try to get it. It doesn't always work out, right? And so keep that in mind, because it's just like I post a shit ton of charts. Yeah, some of them are going to pop off, some of them are going to get beat up. They sort of all average out, and we just try to capture the ones that are moving, right? So again, keeping in mind that it's really easy to be like, well, fuck, that guy just got the timing there, and then it's perfect, and I can't do anything, blah blah blah. That's not really what we're trying to do here. We're trying to understand the overall, and so again, today, think about where the market is today. What was our gauge coming in? Okay, we see the market taking some profit, and we understand it's sort of we're going to need that a little bit, right? But we don't make any sort of decisions that change the script, right? And so when we look at the overall day, S&P lost 0.5%. It's very much within its range. It's on its trend line. Looks pretty good, right? From the take profit from the open, bounced on its support and just traded on the support the whole day. Nothing much to see here on the S&P, right? Not much there. Nasdaq, the same thing. Again, the number is a little bit more skewed because, again, we talked about sort of growth is going to be the one that makes its move. Still, it's within this trend, and I think this chart it's really funny that this chart actually looks as good as it does, and the reason why is just mega caps, right? When you look at mega caps actually look great. And what's the reason why these look so good over here now? It's the liquidity, right? The liquidity over here, it allows it to. It's like having a nice chin or something over here, right? Mega caps just got bigger chins and jawlines, man. You're never gonna compete with them, right? You're just never gonna compete. You get that little scrawny little face, right? Apple and these big boys, they got some nice, nice bone structure, right? And that's gonna happen, right? And so you get these candles here that, yes, the percent adds to basically that 1% you see on the Nasdaq, but again, it doesn't. It's so important. This is where you'd actually have a hard time table trading and just looking at numbers as if let's just say you didn't actually get a visual and you just saw the numbers. You would actually have a completely different understanding of where the market is right now. Like if I actually just if we all just sort of never got to see any of this, visualize it, and all we got were numbers, you'd have a very different idea of where the price is right now. And a lot of this again is it's the way that we can look at these and understand what the candles in the way the trading is being done, that it can actually signal some different ideas. And actually, like a candle like this, okay, it lost almost 1%, but we understand this is a pretty bullish move. This is actually a pretty bullish candle in the way it traded, and actually generates a lot of bid, and actually has a very strong support. And so when I see something like this, I go, okay, that backs up my idea here. I can keep pushing a long position. You could have even probably picked up a position here if you didn't have one, and feel pretty comfortable over that overnight, and looking to push further and further, right? And so when you start to go through these, Facebook is the one that's pulling back the most. Again, looks just like the other growth tickers. And the reason for this is that it was already on its move a lot earlier, right? And this led the market here. This kind of move here, you still feel good right here. And you understand looking at this candle that there's action within this day and within this move that's to the bid side, and it's still holding sort of one level here. And so again, when you look at some of the negative numbers, sometimes it can be very negative, and it can be in the sense that it makes it less bullish. But for instance, Facebook here, right? I did not have a long-term position put on here. This was short-term, so I'm not in this. But I'm still looking at this in the sense that I can go take this trade. And it's important to realize when you need to shift your bias or not, think about the whole bias we have right now. It should overpower anything bearish that we see in sort of one day. And so this is where you start to actually turn some of it on its head. And you can look at some of these candles, and I don't know if Google's the best. Google's not really a good example. In terms of when we look at these tickers and we say, is this bullish or bearish? If you see something that's a little bit more bearish, and some, I mean, I guess Amazon really is the best example. When you look at this, it lost 1%, but there's so many things on this candle that we can say are actually bullish. And what we want to do is basically, if we put it on sort of a mapping of like plus ones and minus ones, we would actually add up more bullish plus one values here than minus ones. Because first of all, we have this breakout idea, okay, that checks the box. We have this whole macro idea of appreciation. We understand that that's a big trend. In terms of where it's going to be in the short-term move, that's really where the things would change up. Is there anything on the short-term move here in terms of candles? Well, we have this candle here that we understood on the 14th was a lot of selling, but that's also when we sort of shifted our focus completely to longer-term trades, and you'd be willing to hold through this. The market confirmed it with the next candle. And so when you look at then today and you put in higher low, higher high, you can abstractly say that's actually a bullish candle, even though it lost points, because it's within a trend, and that's actually the only thing that matters. And so you can have things like the NASDAQ losing points here, and then you can go, you know what, this chart's actually pretty bullish. It's actually a pretty bullish candle here. And this is one of those weird things that, again, you actually let a bias shift a little bit of what you see. And you have to kind of convince yourself a little bit. And this is where being able to take trades on those supports, it's hard, and I'm going to use the shop as an example because I think this is one of the most violent moves that you'll see, that you actually, listen, you have to just take it. And it may not pay off, it may not work, but I would say probability-wise, it's going to pay off more times than not. And this is where, again, we're not just trying to get a short-term trade here. If you're just trying to take a short-term trade here, then I would say there's more room for error, and more bad things will happen to you, right? Because you needed to immediately go. In this situation, if you take a long-term trade, it could actually sit here like this. It could actually sit here for a day or two, probably the whole week, and you would be fine in that position because of how you picked it up. If you picked up 3-month contracts here, 3-month contracts, if this trades sideways, you will gain money every single day. I guarantee it. If you bought here just on that tick, that low tick into this support, you buy here, this thing could trade flat the whole week, and you'll actually be gaining every single day. And that's, again, that is the long-term trade. And that's what happens, because you're buying at a low volatility. And do you know what happens to volatility into the future? Well, there's always an expectation of more volatility to come. How are options priced? Well, they're priced, the premiums are quite literally just the IV. The premium, we call it the premium level, the IV. Do you know what happens in the future? Well, the more you go into the future, the less we know. That means there's more volatility inherently. And do you know what happens to that calculation when the price is going down very quickly? It's no longer reacting just to volatility, it's reacting to the underlying. And what happens is that price goes down a lot quicker than the volatility gauge does. And so what will happen is that as this comes down quicker, it's reacting to the underlying so much, then you buy it on support. And what's going to happen? Well, now we're not going to react to the underlying if it's moving flat. We'll react to the IVs going up. And this is where it's which is affecting which? Is the price affecting volatility, or is the volatility affecting price? Well, it's a fucking contract. It's not the actual underlying. It's the option, right? And so then we go into, well, do options actually affect the underlying price or not? And so that's a different question at the end of the day. But we do know that this is affecting the option, but the volatility is not exactly getting affected at the moment. The volatility get affected after this gets done, because we can only handle one thing at a time, basically, with pricing. We're not trying to calculate also IV at the same time. That's basically unchanged, which is why a lot of times you can get price moving down or moving sideways that you're actually gaining value, because, again, the IV is changing. But it doesn't happen when the price is selling. That's for sure, because, again, this changes the tempo. 5% here, this is where, when I looked at this morning, like for Tesla, why did I take this trade on Tesla? It's not exactly a great trade in the sense that, well, my support's down here. This price action on the short-term vol is probably less consistent than what we saw on the rest of growth tickers. We know that EVs are having actually a tough time coming out of here. There's news event around Tesla, which is probably bogus anyway, but whatever. It's getting traded. But what we can do here is a lot of the same, where we understand that, okay, based on the way this is coming and getting tight here, if the price even continued, and you heard me this morning doing a calculation where if this price even came down a little bit more based on buying the option there, I'd actually be gaining value on the contracts. Even if it started to come down more, you had about 2.5% the price could continue to go down, and you'd still be break even on the contracts, on the long terms. And so if it trades flat, I'm actually gaining. And so this sort of pop here, this is why I talk about the alpha involved there. The pop here actually covers all my risk, because everything I just did in terms of a risk calculation, I don't even have to worry about now, because this thing just popped up that amount. And so it removes the downside potential, which I already figured it would be positive. It's if it got further down, then you're really talking about being an investor at that point, because if it kept going down, well, you'd have to get out of it, or else you're going, well, time to bag hold this bad boy. I expect it to come back. Like, those things can happen. You don't want that to happen. That's your risk. That's your tail risk. But, these kind of things of buying here, it's, again, it's about just understanding the moment a little bit, understand a few things. But if you're able to make one of those trades like that, especially if, then this is why it's important, is that we're in so many, I would say, if you're like my portfolio right now, I'm in so many long-term trades right now that I know I'm going to be pushing and sitting on, that I'm just trying to flesh out this last growth part, because, again, all my growth trades were short-term. The only thing I'm trying to do is build my growth trades right now. And like I said today in the morning, is that the answer is always to buy earlier. Just buy it yesterday. Buy it yesterday. And that's the truth right now, right? But when we bought it yesterday, and what I'm saying is like 2 weeks ago, when we bought those, we didn't have a long-term view. We had a short-term view. Now that it's changed, you have to still look at it the same and say, the best thing I can do is buy yesterday. And that's the truth. It's just with a different connotation this time. You're buying longer-term contracts instead of short-term. And again, this is where you need to make sure that you're still harnessing the same sort of ideas and rules for taking that trade, but you have to actually give yourself some room to get into them. And I think sometimes it's really easy to let your previous trade sort of hinder the performance of your next trade, and you actually overmanage it. And that's like today, where you can look at price action, and I think the Myrna was a good example. And I talk about, you could really easily push yourself out of this position because it's over 5% at lost. And this is one of those trades that you just want to push long term. And if you're in long term contracts, you have to remove the idea that you would have with the short term. But sometimes it's not easy to adapt that understanding where, let's say you're in, Mays here, you would take profit on this probably because the move happened so quickly. You probably were out Friday. And that's where that's based on, you always are trading based on the contract in yourself, not the market in that sense. And I think I've articulated it well enough in the past and how I've been talking about it, where a lot of the times you're making the trade based on you and you need to beat yourself, right? That's sort of where we are right now. And as you're putting on these new, let's say you're doing what I'm doing and you're trying to flesh out the rest of your growth trades, as you're trying to build that last piece of your portfolio, you got to understand that you're taking those trades for a different reason than why you have some of these other trades that you've been sitting on, right? So if you're sitting on some of the value trades, let's say you're just sitting on pure Dow bad boys over here, right? You're just sitting on the Dow or like banks, right? And you're just in this position, you're just pushing it. You got to remember you're capturing something in a different way, and this is where you could say, well, why don't I just continue with this one? And it's hard to acknowledge some of this price action to be like, well, that's worth it to buy on these pullbacks, right? And I do talk about the times when things are just trying to buy those, but again, this is you are talking about price catching back up and then continuing a trend that we're on in a lot of ways, and a lot of this comes down to, is this good price action or not? Should this be here? Is this here or not? And I think this is where you go to the average and you go, well, this is the price right here. And this is what I think everything's going to do. And with that, that means these tickers that are down here that have pulled back and sort of don't really add up. And this is where you get into, again, clean energy and things. And I think we've pulled back the sort of the gas on those a little bit. But when you look at them, they still offer, maybe we'll use something like Zoom, for instance, right? You use something like Zoom here instead of clean energy, and we talk about how far behind this is, and you have an expectation it's going to catch up, and so it's so hard to figure out the timing here, because all you're trying to do is you're trying to add something on, and you have this factor of catching up. It's just you don't know how fast it's going to catch up, and so you don't know if that's the best play to make or not, and that's where a lot of the times the best answer is just to do it. If you like something, not specifically Zoom here, but things that are in this realm of, okay, well, I do want to be a part of growth, and tech is going to probably continue to do very well, and I'm in some Apple calls, and I like my Apple position and my Amazon position. Okay, I'm doing well here for a long-term trade, but I want to be a part of some of these other ones, right? Not as normie, maybe something a little bit more. The only time you're getting those trades are on these pullbacks, right? And you just have to take it when you see it. You just gotta do it. And again, the thing to remember is, as long as that is sort of a local low, you can push that position for a long time if you have a long terms, and it doesn't need to be a home run. It doesn't need to be. All you're trying to do, if you're trying to put on a growth part to your portfolio right now for longer term, you're just trying to capture something that's going to make a move, right? It's going to make some sort of move. As long as it's going up, then you're doing it right. And that's what it's about here. And again, you're not going to be able to perfectly time it. Sometimes you think you do. Like today, I can be like, well, I perfectly timed Tesla. I perfectly timed SMH. It was perfect. And so I'm just better, built different. Here I am. Take my trade. Don't trade at lunch, guys. Take my trade at lunch, and do these things, right? You could buy it at close. It's the same thing. It's literally no points were gained. So this is, again, it's about just, if you want something, then just take it and do it. And don't worry so much about, this is from like a portfolio understanding. Don't worry so much about the edges right now. Like when we talk about the margins, you don't have to worry about the marginal stuff so much right now, because you're trying to trade something for more of a, you think there's some inaccuracies in price. And I would say that there certainly are on the growth side. There's going to be a lot of more pullbacks and violent sort of price action on growth. And so you can take advantage of it at any moment. And that's really the truth. And that's, again, we try to use some levels, and then that takes out the human factor. This is the benefit of having some, when we have true support levels, is that when this happens, you can just buy this, and I feel okay doing this. A lot of the times what we'll have, like right now, and this is sometimes for some of you, you just need to, if you don't have a level there, you need to shy away from just buying it anyway, unless you again have confidence to manage yourself, not just the trade. But this is the benefit of actually having levels, and it's so important to sometimes have those where you can just confidently go buy that and realize that you don't have risk if you put that rule on you that, okay, it can't break this. And if you do that, you will take some really nice trades in this sort of style of trading and build something into your portfolio that you can feel good about and be like, okay, well, even though it doesn't so much matter, that extra little bit of price I got, sort of the gain I got was actually very much worth it, and worth something there because of the way I was able to buy it. And those things, they can help a lot in terms of this longer term understanding, because you sort of understand the price action a little bit more. I hate when I have to buy something and it's kind of in the middle of nowhere, and then you start to push it, and then you start to go, well, I really don't know where this is going either. It's a lot different if you got this sort of level. And again, that's the benefit of having some sort of breakout of a pattern, as we can understand the price action a little bit more. So again, I'm not buying things I don't understand, and I think that's probably an important thing to still see. And when price starts to do things I don't understand, I've already talked about, I just won't trade it. And I think that's a hard lesson a lot of the times, is that you just sort of see things and then you want to go buy it. You can't do that, right? You can't do that. Uh, yeah, leave it at that. Okay. Let's talk about a couple of things. So first of all, the dollar pushed down a lot of price action here. I would say this is probably again, it's going to shift. I think it will shift a little bit of the flow of the week. And so coming into tomorrow, I'm going to probably talk a little bit more about, we'll see where this is. And then in terms of where China is, I think, again, trying to build this last piece of, I'm going to just speak about it through myself because whatever. Trying to build the last piece of growth in my portfolio. I do think a lot of it is going to be dependent on when the flow is coming in. When you look at things like the ARK ETFs, I took these at lows here, and I talked again, not Lowe's the store. I didn't go to Lowe's. I took them at the lows here today, and I talked about these like on Square Inc. Right? In a lot of this is what I tried to do is I see all that volatility on the dollar, and I see that there's some hedging going on in the morning. And what it kind of signals to me is that this was sort of the digestion so far of some changes that have happened since last week, and that a lot of that was the take profit from this short-term move to possibly go into a long-term move here. Again, the Nasdaq is already on full long-term mode on mega caps, but the smaller cap, not that this is a small cap, but a lot of these are within a flow sort of state right here that would get affected by dollar movement in the way in which you're putting money into things. Just think about it. You're a big institution. When you're building a portfolio, what you're doing is they're already bought everything. But it's a lot easier to buy mega caps and that's why we see the liquidity on mega caps just holding those, and they just keep trending. These kind of moves here are built on the fact that there's not constant demand, and institutions are not constantly buying something. They bought Square Inc. here, for instance, and then this is not them selling. This is just normal everyday people that took some profit here, right? So what are they going to do is that if there's money coming in and we see the dollar coming down, that means there's cash in someone's hand, and we know that there is cash in hands right now. And we saw that it didn't go into bonds, and so based on that, I would say that this was, if you had to put it into probability and based on what we see, that dollar action should lead to, beyond mega caps, some spreading of some inflow, and you should be able to get some inflow. So what I want to see is I'm speaking to the growth side again. Everything else is just trending, so there's not really anything to see. It's just constant. Those value plays continue to just get periodic buys. Like every open, they get the same buy every day, right? Healthcare gets the same buy. These tickers here, they're not big enough. They're not big enough to get that attention in a lot of them, and they don't have the same liquidity. So what will happen is that the order will come on a pullback. They're trading. Those institutions are trading. whether they want to buy it for fundamentals, whatever the fuck the reason why they like the name, they're buying it on trade. They're going to wait for that shit to pull back. And again, this is in the middle of nowhere here, but it's some of this understanding that I have is that that extra volatility you see on the dollar is people ready to go spend more. And again, that understanding the timing that it could be random. We're going to see if this move here, if this is the pullback and this is the sort of the pivot point on a lot of these tickers, if this is today. Now, again, it can continue to go down tomorrow, and that would be completely, completely normal for the trend to go right into the support. A lot of this idea is, again, it's very biased. It's very biased to be buying everything here and not waiting for the true support to come in. And so I'm going to see if, with the dollar, if we can get some sort of correlation there. Let's see if the dollar pushing down so much. That should technically be very good for this over here, the way that price action came in today. And so if we get some moves on the Hang Seng coming into the day, Europe, I see Europe continuing to trend very well. And when you look at the European markets, they're all built on, they're basically the Dow. They're basically the Dow. And when you think about the legs they've got, it's basically the Dow. And they're going to keep trending through value. This is where the travel thing comes in, okay? So with the dollar pushing down so much, and you want to go put more money into the market, where is a place right now that has a lot of short-term volatility that still, if we talk about a longer-term trend, is going to get a flow because of how it's trading? It would be on the travel side. This is the fucking king of short-term vol. These sort of things in here, again, I think that today and going into tomorrow, these are sort of the things that we can control in a more shorter term. So again, everything else is so long term and it doesn't really matter day to day. But these moves in here, when you look at this kind of stuff, I think that dollar move can affect a lot of this movement in here, because at the end of the day, the travel side, just like some of these growth tickers that are smaller, these are not getting constant everyday moves. There's an everyday battle. There's not a constant everyday order going through pushing this thing up. There's no trend involved. You're getting a lot more back and forth short-term vol. But if the dollar is pushing down and there's a lot more cash to be spent again, we're going to get another injection. Where do you want to put that money, and how would you exactly trade through this? Again, when you're trying to find a place, you're not putting more money on Apple. You have the same order that goes through every day. You're not putting more money on a big oil company. You're not putting, again, you're putting it on these areas that do have some sort of volatility around their short term, and possibly have just taken profit, pulled back, and you're going to put it there. These are the kind of things that, in terms of controlling this timing a little bit, when we try to talk about, okay, well, where can we find some alpha at least? It would be in these kind of things. And so I think it's going to be really interesting to see tomorrow how that dollar moves, how the other markets move, and see if we can find some of that flow. Because again, if we're trying to build this last bit of, I'm trying to build the last bit of my portfolio, and it really revolves around capturing these other growth moves, besides mega caps. Again, I'm already sort of entrenched in mega caps, and then more of this short-term volatility on the value side, which is really just travel, and some of these moves that have not stayed on a trend. They're very volatile because people still don't have really a good handle, I would say, in terms of being clear and confident. If this gets money here, then we can chalk it up to some of this idea of the dollar pushing and some of these ideas, right? And so we're going to look for some of that, I think, tomorrow. And again, that's where we can operate in a little bit. We can operate in a place that's smaller and it's more nimble. And again, we can get in and out of things very quickly. These are the areas where, again, we can find our alpha, because it's about just like the 1% through here that you're buying when no one else really wants it. In that difference, it's like, look at Dogecoin. Dogecoin went from like, what the fuck is it? Like 1 cent to 2 cents, whatever the dumb thing is. But you're talking about a lot of percent, right? A lot of percent gained for nothing, to put it into normie terms, right? So what you're doing is you're buying something that no one wants, but then what happens? It's not that someone wants it. It's just money gets thrown at it, and it's going to cause the price to go up. On the option side, that little bit of hope and that little bit of price movement and the momentum that comes in there, it really does change the shift. And that's where, when we talk about options, you've been buying something for 30 cents over here for $1, and all of a sudden you get to $3 because of volatility alone. And it feels really silly. And that's where this idea of flow, and we can find things on the macro side. It's the dollar amount that comes in that affects this whole thing. It's how much money gets thrown behind it, because price isn't really a factor if you have plenty of money. And that's why when we talk about cash and opportunity, you don't really care what the price is if you have a lot of money. And I think these are the kind of things here. No one really cares what the price of this is. No one actually cares about this chart, but it's still one of the most consistently easy to buy on pullback charts there is. Travel is so volatile, but it's one of the most consistently bought on pullbacks that there are. This technically shouldn't be holding value the way it does. It doesn't really make sense. But again, you have this across the board on these charts that every time it comes into some sort of, it's getting bought up. And when it gets bought up, what I'm trying to say is, when it gets bought on the pullback, it gets fucking violently bought. I'm not saying like, obviously every chart that goes down will eventually go up. I'm talking about after it goes down at any random point. You don't know when it is. Again, you don't get to time it. But when it does come out of that low, it violently moves, right? That's what I'm trying to say here. And so if that does get a flow, it's a violent move, and it would be backed up by what we see on the dollar side, because again, I expect everything to keep trending. So we're going to try to find some of those opportunities. The natural gas play here, I think, was pretty interesting. Again, I talked about it a little bit. Again, I was already getting a part of these ideas here, and we had already made get an oil play, and then this happened. Right when this happened here, this is where I'm like, okay, natural gas. I'm gonna go jump on that bandwagon, and again, that's more very economics driven. Again, they're not completely inversely correlated, but they're very, I would say, the demand doesn't really so much matter here. It's the way the supply works, and understanding that the supply comes in chunks on this chart. It helps more if you can understand on the economic side. Like for oil, it's not the demand. The demand is constant, basically. Everyone always needs to have oil, and again, we know that demand peaked out. It's the way the supply works and the way it works in chunks, and why does it happen on the futures contracts the way they trade. It's understanding the in-betweens of those contracts, and you can capture in that moment, and you'll get onto a trend, and then it gets all volatile, because it gets really volatile all of a sudden when there's not that supply coming in or supply leaving that's constant. And so this is where it's constant, and price will just react accordingly. And it gets really funny how you get things that are so volatile and then go into very, very straightforward trends. It's like, why? What are we doing here? And again, it's because it takes time to find equilibriums. It's funky like that. Okay, let me see. On the sell side, these charts, again, we're not getting involved on things like Blink. I want to remember that, or keep mentioning that. Again, we have things like apps that came down. These things that are happening, I'm not buying shit like this. So I think some people think, or some people might think that we're still trying to get involved with those things like this. We're not getting involved with things that continue to come down like that. If it's not, again, if it's not in an uptrend, we're not buying it. And then if it's not something that recently broke out of a pattern and is just now taking profit off of a big move, those things like those charts I just showed. Oh, okay, Uber was a nice trade here as well in the trend line. If it's not coming out of a big move and a take profit, and it's sort of a take profit day that I think is too much, then we're not buying it. If it's getting a lower and lower low, we're not buying those. So I'm already heavily positioned. So again, there's too many good things to buy, but definitely not be getting involved with those. No matter what happens, and no matter if we think equities are going up or not, there's really no reason to be wasting money on some of that. So keeping that in mind. Again, healthcare continues to do very well. This position here, I think it's important to note on some of these that in terms of portfolio management and sort of risk management, I'm talking a lot about growth right now, but that's because I'm already heavily positioned on the value side. For instance, I've already talked about this. I was already in a very long-term position through here. I took profit on some of the shorter contracts, and I talk about my layering strategy that I use, where I will buy 3 months out, and then as that goes on, the next time there's a pullback, I'll buy more 3 months out, take profit on some of them, right? And so let's say I buy everything here. Okay, we're going. There's a pullback coming. I'll take profit on some of those, right? That are more on the more. Let's put it on. They're on the more in the money side, right? The deepest in the money. I'll take profit on those. And as the price starts to break out, like over here, I talked about this move on Anthem and UNH as well. So I start to put on more trades. I'm not putting short term. I'm putting all my long term on. And so now the move's continuing. It's important to continue to push this position and to add on to this position if you don't have it, and also to realize that if you're not in this position, this is where a lot of the error comes in, is that you're not in these positions that continue to trend, and it should really shape your understanding of opportunity cost. And this is the problem, is that if you're not a part of these value trades, and the reason why I'm talking about this is because this just pushed through another high today, and when you're a part of this, it will shift your frame of reference for trades that you should or should not be taking. And so when I'm trying to build this growth position, I understand that as I take trades, if it's not better than me just adding more on here, and you can look back in hindsight and look at the price, that if it wasn't better for me just to add more here today going into tomorrow, and compared to like me buying, let's say, Tesla, trying to take a chance on Tesla, or buying Shop, or buying Uber, like these things I just showed here, or buying semiconductors at their low again. If it's not worth that for just the ability just to sit in a position, and whether it comes down or not, there is there's a factor of being eased into a position and eased out of a position there that's not as violent as growth, then it might be hard if you don't have that benchmark. And so even if you're not in these positions, what you still want to do is just go look at those options, and realize how much safety there is here to get a lot of points, and to realize why these are such important sort of trades to be a part of. Again, same with like when we look at the Dow average and look at these, right? I would go find out what these numbers are and how you would trade it in terms of your money, and then go figure out, okay, if I'm going to trade something, it needs to be better than this. Otherwise, I can just go trade that, right? And that's where the funny part of opportunity cost comes in. We all have different actual opportunity costs in terms of trades, in terms of my ability to get into trades, your ability to get into trades, in terms of talent and skills, and then in terms of remove the timing and just how much money we have. A lot of times, again, this is where if you're a big institution, you can just go buy up a bunch of ETFs, you buy shares, and you make 12% a year on billions of dollars, and you'll make more by doing that instead of trying to make a bunch of short-term plays that cost like $1 million each and do it, whatever. With us, a lot of it comes in between the numbers, right? But then it comes down to what we buy, and it's very specific to what we buy, because sometimes we get more exposure and we get more points. It's like, look at last year, right? We bought things that went up 700%. Like some of us traded 10 different tickers that went up 700%, right? And we have to operate in that space and make money, right? And so thankfully last year we made a lot of money because we traded things that were putting a shit ton of points on. That's not your benchmark, right? That's not your benchmark. And you can't look at that as, well, if it's not going to make me 700%, I'm not going to fucking trade it. That's, again, where it gets a little funky, because sometimes those opportunities are there, and that might be the best one for you, but I'm not going to go trade something that has that kind of risk on it, probably because it doesn't equal enough money for me to do it in the first place. There's plenty of things out there that they offer a lot in terms of a promise, but at the end of the day, it's not enough money for myself to get involved in, but it might be enough for you, and it might actually lead to you making better decisions. And again, it comes down to, I post a lot of charts. When you look at those, maybe be like, okay, this makes sense for me. And I'm talking about this in terms of adding on to a long-term portfolio. It's really hard to look at what we have in the market. You got 5,000 different stocks. and you look at them and say, okay, I'm gonna go buy these 10 because I think those are the ones that are gonna go up the most and make me the most money, let's say within the next 3 months. And you're gonna just be wrong, obviously, right? You're just gonna be wrong. And so that's where again that's not the question. That's not the question to be asking. It's not, well, which 10 can I buy and I'll make the most in the next 3 months, right? We didn't If you did that during COVID, you lost money. All you had to do was just buy something. It's just the way in which you're doing it, right? It's how you're doing it. It's not so much what, and that's where I can go buy certain things, but at the end of the day, if you just bought something, you did well. The same thing applies here. It's just if it isn't a different move, you have to understand that it isn't a different move, right? Apple compared to Shop right now are two different things. Tesla compared to Ford are two different things right now. Even though they're the same in terms of a sector, they have different price moves and they have very different price points. You guys are much better off buying Ford than Tesla right now. That's the honest truth. Even if you like Tesla so much more, the reality is that in this move here, some of you can only buy one contract, and this is my last point, we'll get out here. Some of you can only buy one contract of Tesla. That is the wrong frame of mind to be in right now. And that's why I joked about earlier is that, oh, just buy one Tesla call. That's the wrong frame of mind to be in right now. What you should be doing is you should have more quantity. You want to have a higher quantity because you want to be able to manipulate your position a little bit more in the long term. And that's like I just said about Anthem, where you put these positions on and you keep adding and then you're subtracting in that move and you're adding on after that move through the different price movements, and you're sort of swaying through that move back and forth, right? And you're putting more on, taking profit through that pullback, adding in after the pullback through the break, and you're still with a hunt. You're still fully positioned, but you keep sort of pushing out your expiration. You can't do that with one call. You can't do that with one call. And a lot of times what that equals is you are just betting. And there are times when we're betting. Right now, we're not betting. Right now, we're positioning. Right now, you want to be positioning, not betting. And you're not going to hear me say the betting word unless we're specifically betting on the short-term plays, which we have been doing for quite some time, but we're not doing that now. So right now, for instance, you would want to be putting a position on with Ford instead of Tesla, because you can go probably put on 100 different calls for the price of one Tesla call. And what you'll be able to do through that is, as the price comes up here, you're going to be able to manage it, and you're going to actually be able to do some things that, again, it's not as sexy to be pushing something for a month, but you can do a lot more during that time that can generate alpha that you can't do with one call. And so what will happen again is you get price action, let's say up to the resistance here. Let's say it does get rejected like over here, but you have an expectation it's going to continue. You'll be able to take some of that profit there, add on, let's say it's way out here, right? Just in the middle of nowhere. And it's getting further out. Let's say you've been in the position for 3 weeks. As it pulls back here, you can take profit again on some of those in the money contracts, making a lot of money from it. And then as it breaks back out, add in new 3-month out contracts that weren't available over here. And then as you put those on, you can continue. And that's something you can't do. You'll do it with, say 100 contracts that you can't do with one contract. And again, that's that promise of gains that you can make from one of these tickers. It may be true and it may happen, but there's still something to be said for your ability to actually to handle that situation over time. Things might come up. Like I had a friend of mine that, again, last point, a friend of mine that put money into Bitcoin when I talked about putting Bitcoin on. And you know what he did? We got up to like 15,000, and he was like, "Oh man, I just made like $6,000. Like, this is great." Like on the money he put in, and he was like, I actually need to buy some things. And so he took the money out. And if he just had more, like, again, you put this into context, if you just had more quantity of something, you could just take something out and put it in, so that if price does continue, you have a piece of it, right? You shouldn't be in something that if you needed to do something, you have to get out of the whole thing. I guess Bitcoin is not the best example, but again, you had one call or 100, you'd have to get out of that one call for whatever you need. Whereas if you had 100 calls, maybe you only get out of 20 of them, and you can do what you need with that money. And sometimes that comes in. I think that's not the right thing to be looking at, but it's something to keep in mind. But at least in the sense of being able to be a part of the management side, it would definitely be on the sides that have more quantity, I would say. And so maybe in terms of opportunity cost, look for things that you can actually play with a little bit more and have some sort of influence on. That would probably be helpful overall. So maybe look at that. And again, that's where some of the ETF ideas come in, where you just get exposure to everything. Right now, they've turned into being pretty damn good, pretty damn good moves. Um, yeah, I think it was a very nice day. I think it's again hard to look at the number, but you have to appreciate some of the price movement. Um, and when we look at some of the recent charts I posted, I think some very nice price moves that again, you never really know, but we've gotten some very nice moves coming out of breakouts that I've looked at previously, and they're going to get harder and they get more difficult to understand, and um, you know trying to capture a breakout on a trend line is kind of strange, and you're going to see some charts tonight that are probably don't they're kind of the same. It's like, okay, well, I guess, and again, it's just about always having the next thing lined up or ready. So we'll see what I produce for us tonight. I will see you guys in the morning. Have a good night, evening, afternoon, wherever you are. Enjoy.